Writing a good offer is all about market knowledge. In a highly competitive market, you can write a great offer and still not get the house. It's the frustrating part of a seller's market. But writing a great offer can put you in the running and might even afford you the opportunity to jump back in if that first offer falls through. So what makes a great offer? Price obviously matters. Very few sellers are going to accept a low offer out of the kindness of their hearts. But price isn't all that matters. If the other terms of the contract are enticing, a seller may accept something other than the top offer. Or those terms might afford you the opportunity to continue to negotiate on the price instead of getting a flat no. Let's talk about payment terms. We've all heard the phrase cash is king, and in many cases it is. It allows for a quicker close, there's no need for financing approval, so there are less things that could go awry before you get to the closing table. However, we are seeing in this market that a really good financed offer is doing just as well as cash in many cases. If a seller doesn't need a quick close, they often don't mind a financed offer. One of the ways you can make a financed offer look better is the down payment. Many people think the down payment is something that only buyers are worrying about, but down payment sends a message to sellers. When they see an offer with a large down payment, it tells them that you can afford the house, that there's probably less chance that financing will fall through. Along those lines of available funds, waiving the right to terminate a contract if it doesn't appraise is really important if you're submitting an offer over asking price. You can offer a seller the moon, but if the house doesn't appraise, you're right back at the negotiating table unless you have a waiver in hand. And if you do submit that waiver, showing proof of funds is really important. You want to make sure the seller knows you have what it takes to make this deal happen. Which brings us to financing terms. Depending how the third-party financing addendum is written, there is an out for buyers if they can't get financing approval. Now, if the pre-authorization is solid, there should be no financing surprises. But if you want to assure a seller that the financing looks really solid, you can shorten up that financing approval period and make your offer really stand out. A couple of years ago, it was always a 21-day period that we would write in there, meaning you could be 3 weeks into a deal and financing approval could fall through. That's really late to have a deal fall out. In recent times with this competitive market, we've been looking more at a 14-day approval period. But in this ultra competitive market, I've been talking to lenders to see how quickly they can get that approval done. Because if you can give a seller a 7-day approval period, that's looking really sweet for them. And that brings me to my next point. Having a local lender is a huge win when it comes to getting an offer accepted. You can use any lender you want, but if you use a big box lender online or at a bank, communication is just a lot trickier. You often don't have one point of contact, you're not getting a hold of someone on a weekend, and you'll just find the whole process a little harder. If you use a local lender, they're part of your team. They want you to get that house as much as you want to get that house. They're able to educate you throughout the process. They'll hop on a call with a listing agent, with your agent, and they'll do what it takes to help you write up the best terms to get an offer accepted. I closed on a house yesterday and the lender was paramount to us getting this deal. She was able to give us a really short financing approval period. She moved closing up a week and we did a financed closing in 3 weeks. She had an appraiser out the day after we had an executed contract, and her diligence is what sealed the deal for us. Another term that factors in is earnest money. If you're not sure what earnest money is, I have a video on this channel that will walk you through that. Earnest money is typically 1% of the deal, and if you back out of a contract for any reason that is not covered in that contract, that earnest money goes into the pocket of the seller. So increasing the earnest money above the 1% really sweetens the deal, but also shows your seriousness of intent. you are probably not walking away from that deal over something small. Option money and the option period also factor into how good an offer looks, but this is a tricky one. Nixing the option period altogether is a decision that has to be made with a lot of caution and some knowledge of the house. I have clients who have recently submitted offers with no option period, but they're doing it on houses that have a new roof, a new AC unit, no apparent foundation issues. The house looks clean, and they're still opting to do an inspection just to make sure they know what's there. If you do go for an option period, keep it short. 3 days is optimal. 5 is probably the max in this market. And consider putting down a little more option money. However, this is where you also need to be careful, because if you get back an inspection report that is a landmine of problems and you decide to walk away, you're losing that option money. Another way to alter an offer is the title insurance policy. A couple of years ago, sellers were always paying for that, and in this competitive market, it's something that buyers are paying for. That cost is prescribed by the State Board of Insurance, so I can tell you what it will be based on the price of the house, and you can factor that into your closing costs. Another thing to consider is who's paying for the survey. If the seller already has an acceptable survey, there's nothing to consider. But if there isn't one, that is something the buyer can choose to pay for that will make the offer a little more appealing. The closing date is something that can really sweeten an offer. Even without a contingency, many sellers would prefer to close on their current house before they close on the purchase of a new house. With a cash offer, that's easy. You can have a quick closing. But even with a financed offer, you can have a quicker closing, and that might be really appealing to a seller. This, again, is a conversation that has to happen with a lender, and again, is a reason why it makes a lot of sense to have somebody local. Let's talk about possession. Leasebacks are becoming increasingly common in this market. What that means is after closing, a seller is leasing back the house from the buyer. The buyer becomes the landlord and the seller is now the tenant. This could be an arrangement for a week, a month. I've even seen requests for up to 90 days. A deposit is usually paid by the seller, and rent could be charged as well, although in this market, I'm really only seeing free leasebacks given. Agents tend to have strong feelings about love letters, but in certain cases, they can't hurt. You really have to look at what the scenario is in the sale. If you have an investment property that was purchased and flipped and is now being sold, a love letter is really not going to do any good. That owner just wants cold, hard cash. But if this is a family home, this is where the babies were brought after the hospital, there are all kinds of memories tied up in the property. A lot of times a family wants to know that the new family will love this property as much as they do. And in that case, it might work to write a love letter. It's not going to seal the deal necessarily, but it's a tally in the positive column. Some agents won't turn them over to the sellers, and I always just leave it up to the discretion of the listing agent. The presentation of your offer also matters, and unfortunately you have no control over this except to work with a good agent. I've received many incomplete offers or offers with major errors. I once received an offer for $1 million over asking price because the agent had made a typo and the buyers didn't read before signing. Presenting a clean and clear offer right up front tells the agent that you're going to be organized, efficient, and hopefully really easy to work with. And all of that is a win. There are lots of ways to make an offer stand out, and you might have them all and still get beat out on a house, but at least you'll have put your best foot forward. If you're thinking of buying or selling a house in the DFW Metroplex, I'd love to talk to you. You can find all of my contact information in the description below.